Hi, good morning. My name is Lance Roberts. I am the Chief Investment Strategist and Financial Manager for Clarity Financial. Of course, also your host at realinvestmentadvice.com. I wanted to do a special technical update today because on Tuesday we talked specifically about some of the deterioration in the markets in our Technically Speaking post. And of course, yesterday, a big sell-off in the markets. The one thing we've been talking about in particular has been this strong rise in interest rates in the 10-year Treasury. And we said it's only a function of time until something broke in the markets. Well, yesterday, something broke in the markets. Now, I know these one-day sell-offs like this are always very unnerving, and the problem here is that trying to anticipate these things can often lead to bad investment decisions. The other side of it is trying to react to these things also potentially leads to, well, poor investment decisions. What happens a lot of times, we wind up kind of panic selling a bottom. By the time that we get to these levels of the markets tend to be extremely oversold. That is the case currently right now. The last time the markets were this oversold was at the bottom of the market back in early February. And of course, from there, the market rallied. You had a great opportunity to rebalance risk in portfolios before the subsequent decline. That decline held long-term support and gave us an opportunity to start adding exposure to portfolios from those lows, which we did. We now have this potential correction that is going on currently. So as we noted on Tuesday, the markets have been holding support at this previous breakout level that went back to these January highs. Now, this was critical for the markets to hang on to, and I warned on Tuesday that a failure of that support would likely lead to a bigger correction. I just didn't expect it to all happen in one day, but that's exactly what happened. We are currently also sitting on support now, going back to these highs in January. So we're still within a supportive range right now for the markets. And again, with the markets very oversold on a short-term basis, I do expect a bounce that we will be taking some action into. On a bounce that gets us back to, again, this level of these previous January highs or even somewhere close to that area, we will begin reducing support. In our equity portfolios, we will begin to sell positions that have simply not been performing well, that have not done what we expect them to do. Our winning positions, we will trim back, take some profits out of those. In our ETF models, we'll do exactly the same thing. Positions that have been lagging in performance, those will be sold entirely. We'll raise some cash. And of course, positions that have been performing well, we'll rebalance those back to model weights. Again, the goal here is not to panic and sell everything out of a portfolio because there's no evidence currently that the bull market that really has been ongoing since the 2016 lows has ended as of yet. But there is evidence that we are beginning to see signs of deterioration, not only in earnings outlook, but also in the economic data. And that certainly gives us pause and concern about where the markets may be headed to as we move into 2019. So we don't want to wait for an event to happen. We want to use opportunities on a rally to begin rebalancing risk in portfolios. That's exactly what we're going to do. I want to step out here, though, and I don't want you to panic because I want to show you a little bit longer-term view of the markets. Now, this is a long-term view going all the way back to 2005. Here's your 2008 financial crisis lows. This is where we are currently. I want you to note that on a longer term basis, we are still holding support at the 12-month moving average. So this is a long-term support line. This has been a line of support that is held very firmly. What signaled the big crisis in 2008 was the crossover of this 12-month moving average to the longer-term moving average of the markets. That longer-term moving average has a big deviation right now between where we are and where we would have to get to signal a major change in the market trend. We're not going to sit around and wait for a 400-point decline in the S&P 500 to determine that this trend is over with. So any violation of this 12-month moving average, which we are testing today as we speak, we are testing that 12-month moving average. If we violate that, we will begin becoming more aggressive about raising cash and hedging portfolios. Now look, Again, I don't want you to worry about what's going on in the markets right now. Yes, a one-day pickup in volatility certainly wakes everybody up because we've had a very complacent bull market over the course of the last couple of years, particularly from these 2015-16 lows that, again, held that long-term support and then turned up from there. So again, that bull market is still in place. Earnings are still good at this current time. Economic data is still good. There's not a huge cause of concern here, so we don't want to become overly negative until we have a point in time where it suggests that we need to do so. That is not today. I do want to stress, though, that on a rally, we will be reducing equity risk. We will be raising some cash until we get better clarity about where the markets will move to over the course of the next few months, particularly as we move into next year. If you have any questions, please go by the website, send me an email. Feel free to call the office. Come by and visit. We'd love to talk to you about any concerns that you have. Well, I just want to let you know that we are on top of this, we are paying attention, and we are managing the risk in the portfolios. Be sure and catch our show today at 3 o'clock. We'll be addressing all this after the market closes today to see where we are, and we'll see you then. You can follow us also at YouTube. Simply go to our YouTube channel for The Lance Roberts Show, and we'll email you our daily show updates as they come available for you. Again, get by the website, realinvestmentadvice.com, and we'll see you later.